Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. The epic rotation, a US small cap index soars 12% in just 5 sessions, leaving tech stocks in the dust as investors bet that rate cuts are coming soon. The Secret Service boosts security around Donald Trump after hearing of an Iranian plot to kill the former president, unrelated to Saturday's attack. Meanwhile, Trump's former Republican rivals line up to back his re-election bid. And the IMF lifts the growth outlook for the UK ahead of the new Labour government's first King's Speech, laying out its agenda. It is earnings season, and we now get the details coming through from Europe's largest tech company with that key role in terms of the supply of lithography machines around generative AI. ASML second quarter bookings coming in comfortably above the estimates. It's a solid beat coming through in terms of the bookings number for ASML, of course, based and listed in the Netherlands. 5.57 billion euros. The estimates had been for 4.41 billion, so a solid beat on the sales number. ASML sees third quarter gross margin at 50 to 51%, a little softer than the estimates of 51.1%. ASML's outlook for the full year in 2024 remains unchanged. They have described this year as a transition year before seeing stronger growth in 2025. ASML still sees 2024 total net sales to be similar to 2023. They see third quarter net sales of 6.7 billion to 7.3 billion euros. The estimates have been for 7.46 billion. We know as well that they are going to be looking, and investors and analysts will be looking at the sales and the demand coming through from the likes of TSMC, the foundry, of course, as well as Intel and Samsung, particularly for the extreme ultraviolet lithography machines, of which ASML is the only company in the world that makes those, crucial, of course, for churning out those generative AI chips for the likes of Apple and NVIDIA. We'll get more details and context around the ASML story, of course, later this hour. A crucial story for us in terms of the geopolitics and the demand for generative AI chips. Let's cross over to Asia. Before we do that, we'll check in on the markets here, because we have seen in the US that significant rotation out of some of the big tech names and into the Russell 2000. A significant pickup. The Russell 2000 ending the day up 3.5% yesterday. Rotation nation, that theme continues. Will it be sustained? A lot of this on bets that the Federal Reserve is getting closer to its first cut, of course, with markets pricing in September and closing in on possibly 3 cuts this year. That's what's being priced in, close to 3 cuts by the end of 2024. We keep across the CPI data, the inflation data out of the UK as well. That drops at 7 a.m. UK time as markets increasingly bet that the Bank of England will also be cutting rates pretty soon. US 2-year currently at 4.43, the pound at 1.29 on a big day in terms of the policy agenda for this new UK government, as well as that inflation print. Brent at $83 a barrel, and gold punching through those record highs, 2,467, closing in on 2,500 for the yellow metal. Again, linking not just to the inflation story and the expectation of further cuts, but also as well some of the political risk out there. Currently a little softer by 0.1%, but it had broken through those record levels for gold. Let's cross over to Asia. Avril Hong standing by in Singapore for a check on that region's markets. Avril.
Yeah, Tom, we're looking at some of the stocks in focus first. As we see HSBC, we're finally hearing who's going to be replacing Noel Quinn. And with that, the current CFO, we will hear in due course who's going to be his successor. But this is traders' first chance to kind of react to the news that dropped during the lunch break. We're seeing the stock barely budging. It was already 0.2% higher into the lunch break. But the sector that we've been really focusing on today, amid this rotation out of tech, is the chip stocks. That is one of the themes that is, I think, hitting the chip names, but also Trump's comments on Taiwan dragging TSMC. But you got to wonder, though, will this feed into the bullish sentiment related to the stock, especially given the optimism towards its earnings later in the week. And then, of course, that Bloomberg scoop, right, about how the Biden administration is ramping up potentially these trade restrictions on its allies to curb China's access to chips. And Tokyo Electron really extended gains after that story broke, 7% down now. And I'll flip the board because even as we see how these chip stocks are getting hit by these news lines, it was already a day where they were the sector that was underperforming because of the rotation. Overnight in the US, you talked about how the Russell 2000 performed, but we are also seeing in the Asia Pacific is the cyclicals that seem to be taking the lead. The Australian benchmark climbing 1%, helped along by the banks. And on the Nikkei, helping to cap declines is those sectors, the stocks that are perhaps more sensitive to the economy. Now let's flip the board as you see those declines on the CSI 300 and the Hang Seng. Very slightly though, it is perhaps also worth pointing out how the yuan seems to be holding up pretty well. Maybe a bit of peak pessimism has been priced in, but also worth noting that the dollar is sliding a little today. Maybe a bit of that Fed rate cut optimism coming through along with a bit of a reversal of that so-called Trump trade. Tom.
Okay, Ava Hong in Singapore. Thank you very much indeed, and how the Fed is factoring in, but also the Trump trade into those Asian markets. We appreciate, with the detail, of course, on the Asian markets broadly across the benchmark MSCI Asia Pacific flat, but with the details and the interest under the hood, as Avril has illustrated for us. Let's take a closer look now at that eye-opening rotation then into small caps. What a story this is. Bloomberg MLI Strategies' Mark Cranfield joins us from Singapore, and we've seen those gains then over 5 days of about 12% for the Russell 2000. Does this have legs, do you think, Mark? And is this ultimately a bullish signal for this equity market?
A bit of both, and also a Trump trade as well, just to throw that in. And there's all kinds of factors involved in this. But if you think of where we are in the year, we're just into the second half, into the earnings season. It's typical that people will assess who were the big winners, who were the big losers during the first half of the year, and now is the time for us to shift our portfolios and get some of the catch-up plays. Obviously, small caps stand out very much in that field. Throwing the fact that short-term interest rates are coming down reasonably quickly now, as you said earlier, the bets on the Fed starting to lower interest rates are getting pretty hot now. It's well known that smaller companies tend to favour the short end of the yield curve. They tend to borrow more there. So as rates come down, that's very favourable for them. And then throw in the Trump factor as well. There's plenty of speculation that he's not keen on some of these huge tech companies in the United States, wouldn't mind breaking them up. It's a bit of a long shot, but it's something that people are considering. So those companies, the Magnificent Seven in the US has a fantastic first half of the year. It makes sense for people to switch a little bit out of those to catch up some of these small companies who may benefit, particularly if they're in the defense sector or other sectors that Trump may favor should he become president. You've got all those things being thrown up in the air at the same time. It's no wonder that there is room for people to get involved in this trade, and it could run for a while, particularly if Donald Trump stays as the front runner going into those elections. This will probably have legs.
OK, the Trump linkage to the small cap rally that we've seen, and whether or not this has further to run. What's happening in terms of the FX space, Mark? You have an eagle eye always on dollar yen. You're seeing a little bit of strength for the yen. I mean, is this it? Is there reprieve now for the Japanese currency, given expectations that possibly you even get 3 cuts from the Fed this year?
Yeah, and it's not just the interest rate side, but there's a number of factors here, and it's a very big week for dollar yen particularly. If we get a close this week below 160, which looks reasonable, if you look at Avril's chart back there, it's got 158 it says on it. So we've been there for the whole week around there. Positioning is very skewed towards yen shorts, very, very big positions, and they've hardly budged in the past couple of weeks, even though short-term yields have started to come down in the United States. The spot rate has started to tick a little bit lower. We're getting closer to the Bank of Japan meeting. We had, again, some data suggested the Bank of Japan or the Japanese authorities did a second round of intervention last Friday. That's 2 shots at intervention in the past week. It is all beginning to weigh on dollar yen. If we don't get a strong close this week, people will come in next week. They'll be looking towards We've also got the Japanese CPI data at the end of the week. If that is further confirmation for the Bank of Japan to go ahead with a bit more tightening, put all those things together, by the time we come into next week, some of those yen shorts will really have to give up. It'll be getting too painful for them. It could be quite a big week next week with people speculating on the Fed, dollar yen starting to gain some traction. We could be going back towards the 150 area. That's certainly the implication if you look at the 1 year US interest rate yield.
150, possibly the next level for Japanese yen. We'll see if those short positions are unwound at the front of next week. MLive strategist Mark Cranfield, always excellent. Thank you very much indeed in terms of the take coming through for the currency, of course, the Japanese yen, the US dollar, JPY cross, and of course the rotation that we've seen, dramatic as it has been, into small caps in the US. Now, Bloomberg understands the US Secret Service boosted Donald Trump's security in recent weeks after intelligence revealed an Iranian plot to assassinate him. The threat is separate from the shooting incident over the weekend. For more on this, let's bring in Bloomberg's Kriti Gupta. Kriti, what do we know about this alleged plot at this stage?
The extent of what you just said, to be completely honest. And I think this is really crucial because it is not related specifically to the assassination attempt over the weekend, which was really been classified as a domestic terrorism incident by the 20-year-old assailant at the time. But the context is important here because President Trump, of course, one of his key policy pillars and one of the key things he's talked about in terms of successes on his foreign policy record has been the assassination of the Iranian general Soleimani. So he does like to talk about that. So there has been, even during his own administration, questions around increasing security, not just for him, but for some of his deputies as well. John Bolton, for example, is just one example of some of the people who still continue to have that boosted security because of the overhang of that assassination from the United States to General Soleimani. Now, I should mention that Iran has been very vocal about this allegation, said this is indeed not true. There is no plot, and there never was a plot. But, of course, this was something that showed up in the last couple of weeks that created that boost on security for President Trump. OK, so that's on the security concerns and the linkages, maybe, reportedly, to Iran, which is pretty fascinating. We'll continue to keep across that story, of course, in terms of the detail. But there's also the focus now. We had the VP pick yesterday, of course, and that really kind of underscored for a lot of people that this is a US that is moving much more towards a protectionist, isolationist kind of move, with J.D. Vance as the number 2. But there's the focus on the economics as well, beyond the protectionism. What are we seeing? What detail do we know about this potential incoming Trump administration? So I think this has kind of been the boogeyman in the room for a while. This idea, especially when it comes to financial markets and economists that are wondering whether that 60% tariff comment that he made ages ago on Fox News, I believe, is something that is actually going to show up. But there are other components to this as well. Remember, his economic agenda hasn't been completely clear in terms of what he's coming out with. But let me shed some light on where that could land, especially because you put this in the context of J.D. Vance as well. Remember, he really is appealing to more of the MAGA crowd, more of the even more right-wing kind of arm of the Republican base as well. And in that comes a lot of pressure to take on something called Project 2025. And I think in this region, this hasn't been covered. Basically, this is a policy proposal coming out from the Heritage Foundation. Now, for our international audience, it's important to remember the Heritage Foundation is a conservative think tank, and it's responsible for a lot of the policies that Ronald Reagan put forward back in the 1980s. Now, the Republican Party likes to put Ronald Reagan on a little bit of a pedestal and really say that, well, if Reagan did it, it's good enough for us to do as well. Some of these policy proposals are also backed by former Trump officials, but not by President Trump himself. And this is really crucial here because some of the policies include things like centralizing executive power, removing food stamps, removing Medicaid. These are all some of the policies that President Trump has not necessarily supported, but talked about in terms of addressing things like the deficit in addition to tariffs. We also had a great interview with Bloomberg Business Week talking about how that tariff proposal would actually work. He cited going all the way back to 1920 with President McKinley. I'm not going to give you a history lesson, but what you need to know here is that his kind of the definition of Trumponomics that he's talking about is really bringing growth back to the states, low interest rates, cutting taxes, and bringing a lot of that money back via the tariff mechanism with a roadmap that was shown almost 2 centuries ago.
OK, well, arguably, there's a case for some within the Republican Party to look at recent history as well in terms of a president and a vice president, or presidential pick and vice president, who, of course, have both said that they would not have accepted the election results as well. And so that will be a concern for some. But it looks like many people are looking past that for now. With the economic platform and the detail there, Kriti Gupta, thank you very much indeed. Here's what else we're thinking about today then. 10 a.m. UK time. In terms of the inflation story in the euro area, we're going to get more details with the data dropping 10 a.m. UK time as, of course, we count down to that ECB decision. That, of course, is tomorrow. Lizzie Burden will be on the ground in Frankfurt for us covering all of that. But the inflation story, of course, will be consequential in terms of giving us more clarity on where the ECB goes next, of course, after moving with its first cut earlier this year. 11 a.m. UK time, King Charles's speech. So it's the King's speech. It's not really his speech. He will be doing the talking, but it's the speech crafted, of course, by this new Labour Party, of course, the government, the new Labour government. So the policy priorities of this new British government will be outlined in that speech. We'll be across that for you, of course, with the detail. And at 7 p.m. UK time, the Fed Beige Book. So details there in terms of how the Federal Reserve and its different components are seeing the evolution of this economy after retail sales yesterday, by the way, came in slightly stronger than expected, reinforcing bets for some that a soft landing is still in the cards for this Federal Reserve. Coming up, the Biden administration floats tougher trade restrictions to block China's access to advanced computer chips. We'll have the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, shares of chip equipment makers in Japan are continuing to fall following a Bloomberg scoop. We're told the Biden administration is weighing even tougher rules for overseas firms seen as enabling China's semiconductor industry. Our tech reporter Annabelle Drulers joins us with the details. Annabelle, there have been a flurry of measures from the Biden administration over the last 2 years or so in terms of restricting access of Chinese firms to key equipment and key tech from the US and its allies. But this is another measure that is being considered now by Washington, by the team, of course, led by Joe Biden in the States. What do we know so far about these additional restrictions?
Well, what we're hearing, Tom, is that it basically means that any and all equipment could be targeted from these major companies. As you say, yes, we have seen a raft of restrictions coming through, and even at the end of last year, for instance, we saw Tokyo Electron in Japan, ASML in the Netherlands, both of these essentially restricted from selling their most advanced chip-making equipment technology to China. But what's really important here to understand is that even with those restrictions in place, it hasn't stopped them from servicing the equipment that Chinese companies already own. And that's what's really critical here to understand, because if you don't maintain or service your equipment within perhaps even a few months, but definitely within a year, they can actually stop working. And that is the issue for the US, because if you've got companies like Tokyo Electron, like ASML, that are sticking with those servicing schedules, then you're essentially still continuing to enable China with its chip-making ambitions.
What is the mechanics then, Annabelle, for the US going about this in terms of these additional restrictions?
So what they're looking at doing here essentially is invoking this so-called Foreign Direct Product Rule, or the FDPR. What it boils down to essentially is that you can put controls on foreign-made products that use even just the tiniest amount of American technology, which is why I say that any and all of ASML and Tokyo Electron's products could be targeted in this. What we're hearing is that this sort of idea or plan is being touted and discussed with officials in Tokyo, The Hague, as an outcome if Japan and the Netherlands don't toughen or tighten their own China measures. Of course, the timing, though, is quite difficult because the election is just a few months ago, or a few months away, rather. So there's that question for allies. Do they really see much of a reason to change?
Yeah, it's really interesting in terms of the services part of this story. I was speaking to Huawei. They were saying that they remember, and they were telling me about those engineers and experts from foreign companies that had to leave their campus after restrictions were put in place. Talk to us about the response from companies. How much of this is about leverage on The Hague and on Japan to get tough versus the Biden administration under pressure from its own US tech companies who've been essentially kind of frozen out from large parts of this market?
Yeah, there's sort of two sides to the coin here, but it's actually interesting just thinking about those large companies in the US, Applied Materials, Lam Research, KLA, these are all major chip equipment providers. They're actually saying that this perhaps isn't the best way to go about it, the FDPR, and they're pushing for other measures instead. Their concern is that if you push Japan and the Netherlands so much, then they could just become quite defiant and not cooperate with the restrictions that are already in place. From the side of the companies, well, we didn't get anything from the likes of Tokyo Electron, though you did mention, of course, that slide we're seeing for the stock today. It is a company that gets about 20% of its sales from China. We did have the ASML earnings out this morning, though. We're still getting those comments coming through. It is interesting that ASML, for instance, and I know you'll get more on this in just a few moments, but they're still predicting the same amount of sales for this year as opposed to last year. So it makes you question, have they really considered the potential for further restrictions? Would they abide by them? The likes of Japan, for instance, is saying that they wouldn't go ahead with these measures if they were indeed enacted. But as we said, Tokyo Electron, ASML, they could see their sales really hit by this, and Bloomberg Intelligence is saying by 10 to 15%, which is why, of course, you're seeing that reaction so far.
Yeah, really important question mark, as you say, for ASML as they look to a stronger year in 2025. And we'll see if that can actually come through, given that expectation. And Bloomberg's Annabelle Drules with the details in Hong Kong. Annabelle, thank you. Coming up, Bank of America CEO Brian Moynihan tells us the organisation is putting more money and resources behind its trading business. More from that interview next. This is Bloomberg.
We continue to invest along three dimensions. Technology, Jim DeMar and the team run it, and they've done a great job. And so 5-7 years ago, we made the decision to give them more capabilities. Technology, the balance sheet that they can use to help their customers achieve their goals, and talent. And so Jimmy across the board continues to increase. And so we feel good about it. He made $1.4 billion after tax this quarter, which is a very strong earnings quarter. But what's happening is you're seeing back-to-back billion-dollar-plus quarters. We're used to be $1 billion plus and drop to 500 when the market slowed down. You're seeing much more stability. The break-even point in the business is, on a relative basis, much lower. The best second quarter they've had since, I think, 2012 or something like that, which a lot of that was just when assets were marked up and came back through the system at profit. They've done a great job. And you know, Tom Montag, 6-7 years ago, started this. Jimmy took it over, has done a spectacular job of implementing it, and we feel confident. We'll keep giving them more RWA, risk-weighted assets, balance sheet, capital, and investment in technology, because that's obviously very expensive business to run from a day-to-day basis.
Brian, I know you want to grow all the business of Bank of America, but do you have a strategy about the balance between what I would think of as a traditional bank lending, interest receipts, as opposed to the fee side, whether it's investment banking or asset management? Are you rebalancing the bank?
Well, this quarter it happened to be half the earnings were from people, half the earnings from institutions. Out of the $25 billion of revenue, 14 was spread revenue, and 11 was, round numbers, was fee revenue. Because the market dictates a lot of the fee revenues, we could do it. But if you think about it from the businesses, in the consumer business, we made a decided decision to lower fee burdens on customers, and the trade-off for that was long-term customer favorability, running 88% across all the platform engagement places. Brand favorability in the 70%, up 20 points over the last 10 years. So we made a decision, lower the fee burden, but get it paid back in transactional accounts. Those are zero interest deposits. That's worked wonderfully. So we grow 1 million accounts a year. They start at $2,000 or $3,000. They mature to $7,000 to $10,000. It's all zero interest rate money. It's very strong. And that's, if it's a young kid, it's a customer of the future. And that's what we're doing. So that balance in fees there. In wealth management, it's all going to be about fee-driven. But the incremental growth, 7% increase in fees year over year, that's what we're driving there. Jimmy has a mix in the trading business, and then the commercial business is actually balanced. Investment banking fees, which everybody talks about, $1.6 billion, but the whole revenue in the business dominated by lending and deposits for corporate customers.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The epic rotation. A US small cap index soars 12% in just 5 sessions, leaving tech stocks in the dust as investors bet that rate cuts are coming soon. The Secret Service boosts security around Donald Trump after hearing of an Iranian plot to kill the former president, unrelated to Saturday's attack. Meanwhile, Trump's former Republican rivals, they're lining up to back his re-election bid. And the IMF lifts the growth outlook for the UK ahead of the new Labour government's first King's speech, laying out its agenda. We're going to get CPI as well, inflation data out of the UK. 7 a.m. UK time, really important as markets ramp up bets that the Bank of England can go with its first cut of this cycle in August. Inflation for the month of June expected to increase just 0.1%, down from an increase of 0.3% month on month for the month of May. But we await, of course, the policy data from this new Labour government with that King's speech later today. In terms of the market reaction, then, yes, that significant move into the Russell 2000 yesterday, really pronounced with gains of 3.5%. Is that theme set to continue with expectations that the Fed could go and will go in September? That is the expectation still across these markets. S&P futures then pointing to further upside of around 24 points, up by 0.3%. In fact, that's the FTSE 100. I'm straining with my eyesight. The UK looking to gains then of 0.3%. The European stocks benchmark currently down 0.1%. The S&P 500 stateside, there it is, 5,705, looking to a bit of loss, down 0.2%, looking to lose 11 points so far in the session. Nasdaq futures also pointing lower by 0.4%. We've seen that divergence, as we've been talking to you about, between the big mega-cap tech stocks and the small caps then, expected to benefit from a rate-cutting cycle if that comes to bear, given the higher debt load among some of those companies. Let's flip the board and look cross-asset then. You did see a move into Treasuries yesterday, yields down and Treasuries up on the back of that. Demand for Treasuries was pronounced, 443 currently on the US 2-year at the front end. That most reactive, of course, to expectations around the Fed. 2 basis point move in yields today. The pound in focus for us today, of course, was a lead up to inflation data at 7 a.m. 129 for the pound versus the US dollar. Brent $83 a barrel, 63, and gold 2,468 for gold, having crossed above a record, an all-time high of 2,469. A 2% gain for the yellow metal yesterday, and gains year to date in the double digits now for gold. Currently flat for the yellow metal, 2,468. Now, traders raising their bets on a second Trump presidency. Bloomberg Businessweek spoke with the likely Republican candidate at Mar-a-Lago. The interview focused on business and the economy, including Trump's plans on taxes, tariffs, and the future of Fed Chair Jay Powell. Let's bring in Bloomberg's Kriti Gupta for more anchor, of course, on the opening trade that comes up in a little under 30 minutes. But Kriti, with a finger on the pulse of all things US politics and what we've been hearing around Trump and his economic policies, what kind of stood out to you then from what the team extracted during this interview with the former president? Yeah, it was a really intense interview that covered everything from Jay Powell's term in office all the way to his policy and what the definition of Trumponomics really is, which is, I think, what everyone's trying to piece together worldwide. And immediately, I think what comes to mind is the word tariffs and the idea that these 60% tariffs on China. As recently as yesterday, UBS came out and said that would cut China's growth rate in over half. And that's a really big story. It also applies to Europe as well, of course, because this was something that our executive editor of Businessweek, Brad Stone, asked the former president, what does that tariff policy actually look like? And he said, look, this is something that goes back 2 centuries. He compared it to the McKinley tariff. And I'm, again, going to spare you the history lesson. But what you need to know is back then, they were really talking about reducing tariffs on American exports to the rest of the world. This was coming about a century after American independence. Trump is using that roadmap to kind of apply now, to have an equal playing field between the United States and the rest of the world. And that is his reasoning for not only making sure that America is competitive with the rest of the world, but also making sure that the money coming in fuels things like the deficit. Of course, he is dealing with other more right-wing pressures in his party, especially after choosing J.D. Vance to be his vice president. So there are more pressures from the likes of the Heritage Foundation, which is known to be a more conservative think tank, that are pushing for that are tougher policies, things like eliminating Medicaid altogether or eliminating food stamps for more underprivileged parts of the country. These are all things that ultimately the GOP, and not Trump himself on all of the elements of Project 2020, but the GOP is including in a way to save America's finances. So eliminating food stamps for the most vulnerable, but pushing ahead tax cuts for the wealthiest. Okay, in terms of the, I just want to get that right. That is what's being proposed, right? So this is eliminating food stamps for the most vulnerable within the US. whilst pushing ahead with further tax cuts for the wealthiest. I mean, that is what's been outlined here.
So when it comes to the food stamps, this is just a idea, and it's part of Project 2025. President Trump has been very vocal in saying he hasn't endorsed Project 2025, but one of the concerns that it's going to be feeding into his policy agenda. On the tax cut front, though, that he has talked about an extension of what was already in place during his first term. And what she's saying, he's actually going to bring it down from 21% to 20%. That was a direct quote in the Business Week interview. It was only a decline of 1% because he said he likes the simplicity of the number. Ideally, he wants it to come down to 15%, but he says that's more complicated. And it would really target more of the kind of corporate side of the taxation. So the likes of Apple, for example, et cetera. A lot of that more from his first term in office, where he's talking about repatriating some of the money that comes from abroad.
Is Jay Powell safe?
He says he is for now. And I think this is important because in previous interviews, he has talked about the fact that he would replace Jay Powell the minute he got to office. He is now saying in the Business Week interview that he would actually let Jay Powell finish his term, specifically talking about interest rate policy and saying that he doesn't expect the Federal Reserve to actually cut rates before the election. And he's going as far as to say they shouldn't cut rates before the election as much as they know that they would like to. Of course, there may be political read-through into that. We don't actually know. But he is saying that Jay Powell should finish the term. This is also significant because we know Jay Powell had cut interest rates back in 2019 off of the back of the introduction of tariff policy as well from the Trump administration when those tariffs first came out on China.
Yeah, he's comfortable keeping him if Jay Powell does a good job, and that if he does a good job seems to be doing a lot of heavy lifting, doesn't it? Kriti Gupta with a breakdown in terms of the potential Trump economic policy, of course, if he wins in November. Kriti, thank you very much indeed. Now, to some other stories making news today. Elon Musk says he will relocate the headquarters for X and SpaceX from California to Texas. He said the announcement is over frustration with California's new law related to transgender children in public schools. Earlier this week, Musk endorsed Donald Trump in the upcoming US election and pledged tens of millions of dollars to his campaign every month. Bloomberg has learned that Russia and Ukraine are to swap 180 prisoners in a deal facilitated by the UAE. The exchange is set to be the 6th this year, managed by the Gulf state, if the deal goes ahead as planned later today. The two sides have swapped almost 1,400 prisoners so far this year. And HSBC has appointed George El-Hedary as its new chief executive, continuing the lender's tradition of picking insiders for the top job. El-Hedary will take over in early September, replacing Noel Quinn, who announced his surprise retirement after 5 years as CEO. 50-year-old El-Hedary takes the role less than 2 years after his promotion to chief financial officer. Now, the UK's new government will use today's King's speech in Parliament to showcase its efforts to spur economic growth. Ahead of that, we're going to get the latest UK inflation data at 7 a.m. For a preview then, our UK correspondent Lizzie Burden joins us. Let's get to the King's speech then, and we'll get your views on inflation out of the UK in a little over 20 minutes' time. What are you going to be focused on? In terms of the King's speech, what are the main policy priorities that are likely to come through from the King? It's not really the King, is it? There's this new Labour government. What's going to be outlined for us?
Yeah, I'll get to the policy, but I have to just acknowledge that the pomp and pageantry is what we do best here in the UK, and it's called the King's speech for a reason. It's these bills that set the tone for the new government, delivered by the King himself in the House of Lords. But beneath all the pomp and pageantry, as you say, it is the focus on policy. 35 bills introduced by the various departments, and the framing will be national renewal with, as you say, a focus on economic growth. So, for example, we're expecting a bill to strengthen the Office for Budget Responsibility, the fiscal watchdog in the UK, which, of course, you'll remember was sidelined by Liz Truss in the 2022 mini-budget. And this is designed to make sure that legally that can never happen again. We're also expecting a bill to launch the National Wealth Fund. We've just talked about this plan by the Chancellor Rachel Reeves to drive inbound investment. And then we'll have Great British Energy, this publicly owned clean power company, being launched as well. There'll also be a bit of a copy and paste job, some of the unfinished business from the Sunak government. So, for example, this progressive smoking ban, also a renters reform bill. And we're expecting to see a little bit of rebellion. And this is about the cap on child benefit to families that have more than 2 children. This is something that Gordon Brown, the former Labour Prime Minister, has talked about a lot. And we expect some MPs arguing that it fuels child poverty to have this cap. The government, of course, has been steadfastly protecting its fiscal rules and saying that it's not going to commit to unfunded spending. That is the argument. And they'll also be saying, look, it's not really a rebellion when you've got such a strong majority for the government.
Yeah, as you say, the former Prime Minister Gordon Brown has been very vocal on that particular issue, hasn't he? In terms of inflation, then, the data crossing in 20 minutes' time, does it lock in, do you think, an interest rate cut from this Bank of England in August?
Certainly, if it's an undershoot, it would look that way. So the expectation is for inflation to drop from 2% to 1.9%, so below the Bank of England's 2% target. At the moment, you've got traders really on a knife edge as to whether we're going to get an August rate cut from the Bank of England. So a dovish print would give cover for that August cut. But if you look at the recent speech out of the Bank of England, we heard from the chief economist, Hugh Pill, kind of saying that he's going to be looking through the data points and at the underlying long-term trends. So it does suggest that an August cut is not yet a done deal. OK, Lizzie Burden, thank you very much indeed with the preview of the King's speech and, more imminently, the inflation data out of the UK. Our UK correspondent, of course. Now, coming up, we're going to speak to the CEO of one of Europe's newest unicorns. It's the Paris-based software startup Pigment. Really interesting story. They've raised a lot of cash from some really significant backers with a bit of an AI tilt as well. So stay tuned for that interview. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Europe's most valuable tech company, ASML's order intake has smashed estimates as the AI boom drives demand for the Dutch firm's advanced chip-making machines. For more, I'm joined now from Amsterdam by Bloomberg's David Watkins. David, really solid set of results then. They're keeping their guidance for the year unchanged. They've been flagging that 2025 is going to be the big year for them, but it seems that this quarter, at least, the most recent quarter, has come through very strongly. Talk us through what stood out to you from these numbers.
Okay, yeah, good morning. It was definitely a big beat on orders in the second quarter. You know, it's showing that the strength of demand from ASML's customers who make generative AI chips needs, you know, ASML's machines, which, you know, ASML does have the monopoly on the machines that can make the most advanced chips. So it just goes to show how this company is finding itself in the middle of the AI boom at the moment. So yeah, from the second quarter perspective, yeah, very encouraging, especially as the previous quarter, you know, we saw a slight miss there, which kind of also speaks to the unevenness of demand as we go through this year. Like you say, the company always said this would be a transitional year. It has a sort of a demand timing issue with you know, the building of fabrication plants around the world coming online. So you know, things may be uneven. To that point, guidance for the third quarter was a little bit lower, which also speaks to that. So it really depends which way investors look at that this morning.
OK, and that unevenness was pronounced, as you say, in the first quarter with that significant demand coming through from China, offsetting the softness in the first quarter, at least, in terms of that AI demand. It seems that's calibrated a little bit in the most recent quarter. Talk to us about the restrictions then, these potential restrictions. It's a Bloomberg scoop, further measures being considered by the Biden administration, and how ASML could be caught in the crosshairs of those tighter restrictions. Right, yeah. So it's already facing restrictions on selling its most sophisticated equipment to China, and those restrictions were tightened again this year. Interestingly, we saw in the latest earnings, China sales in the second quarter were actually up quite a decent amount, which shows demand for its older machines is still pretty strong. But when it comes to the prospect of these new restrictions, yeah, that remains to be seen. We saw shares in Tokyo Electron today fall in Tokyo. You know, the Biden administration may be pushing for these increased restrictions, which involve more the servicing of machines that are already in place. So this would basically prevent ASML from, offering maintenance support to these older machines, which means they would, gradually. The idea is that they gradually sort of, fall out of function if they can't be continuously supported. But then that again
we've seen evidence of other Chinese companies having to get to grips with their own supply chains as a way around these restrictions. And of course, with the US election coming up, that also raises its own questions about which way potential restrictions might go.
OK, David Watkins, thank you very much indeed on the details coming through in terms of the latest earnings for ASML and the impact of these potential further restrictions from the US. Now, moving from mega cap European tech to tech startups and staying in terms of the tech story, but moving maybe to a little bit of software where the focus is going to be in the next couple of minutes with this next interview. But it's been a good quarter. In terms of the fundraising, it's been a really good quarter for European startups, raising close to $16 billion US. That's more, by the way, than their peers in Asia for the first time in a decade. That is according to data platform Crunchbase. One company benefiting from the flood of funding then into the sector is Paris-based software startup Pigment, who recently reached unicorn status on the back of a successful round of fundraising. I'm joined now from the French capital by the company's co-founder and co-CEO, Eléonore Crespo. Good morning, Eléonore. So this is a company, Pigment, your company, offers financial and sales planning software. You have customers and clients including Unilever, Deliveroo, Klarna, recently raising $145 million US in a D round of funding. So you're well positioned, it seems. And then just outline for us, for our viewers, exactly what it is that Pigment does. What are the solutions that you're offering to your clients and customers?
Sure. So let me first set up the scene. I think we live today in one of the most disruptive periods in history. And so the pace of change, like the pace of change that CEOs, CFOs are facing today is quite overwhelming. So what we try to do with Pigment is to help CFOs, CEOs avoid surprises, because this is really the number one thing they hate. So Pigment is this business planning platform that really helps large companies evolve at the pace of change that they are facing. So if you take one example, you were mentioning Unilever, it's one of our customers. Unilever, when they launch a new ice cream, and if a TikToker picks up on this ice cream and this ice cream becomes a new success, well, they need to quickly adapt their sales to that. And they cannot wait 3 weeks to adapt their logistics, supply chain, etc. This is what we are here for, to help them adapt quickly. And when the news are not so good, we also help them in the same way.
OK, interesting. How do you compete with some of the legacy providers out there, the likes of SAP, the likes of Oracle? What is the proposition that you have that they do not?
So actually, we live alongside SAP, Oracle, etc. What we do is really we compete in this business planning ecosystem. So meaning that when a company needs to plan better, when they need to be more agile, more flexible, this is where we come in. And so when you think about these data platforms, this legacy player, they are living in a world now where we have to face huge amounts of data. I was talking about this unprecedented change of macroeconomic conditions. And it's very hard for platforms that were first on-premise, now moving to cloud, to actually adapt very quickly. Today, most companies have siloed departments. They need to be highly collaborative. They need a simple tool and very robust tool and platform to actually help them with their needs. And this is where we come in. So think about Pigment as this platform that is very modern, very agile, very nimble, and that any very large company can use.
Eléonore, given the kind of challenging background and environment in terms of the economic picture for many of your jurisdictions in which you sell, are you seeing a slowdown? Are you seeing a little bit more caution amongst your clients and customers in terms of the spend on software?
That's a very good question. I think actually we don't see a slowdown, but we see more uncertainty than ever, for sure. And so people are actually looking for a tool to adapt faster. And they're also very interested in AI. And obviously, Pigment is the number one platform in this ecosystem that has been able to actually adapt AI to our customers' needs. And they know that if they actually manage to put AI within whatever they do, they will be able to be even faster. So we feel really this need for a faster rate of, like, basically helping them move faster.
Okay, Pigment co-founder and co-CEO Eléonore Crespo. We've run out of time, but really fascinating update in terms of what's coming through for your business, as you, of course, have raised that at 145 million and what you're doing to put that to play, the AI demand as well. And we appreciate the detail and the time. We'll continue to keep across this business going forward. Thank you very much. There's plenty more coming up. We're going to set you up, of course, for the CPI out of the UK. That data drops at 7 a.m. UK time. We're also going to give you a bit more detail in terms of that rotation that we've seen into the small caps in the US. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Wednesday. Checking on, of course, on the rotation that we've seen from the mega cap tech names into the Russell 2000, which ended the day yesterday up 3.5%. And if you look at the calls positioning and calls options, it suggests that there could be further upside in terms of the gains coming through for those small caps. Of course, a lot of that linked to expectations that the Fed is going to come through with 2, possibly 3 cuts this year, and the benefits for some of those smaller companies. And in terms of the bets on small caps, in terms of those options volumes at a decade high, so just worth bearing in mind. Let's flip the board and have a look at the US dollar as well. Of course, that ties into the expectations around the Fed and the fading sentiment now over the US dollar, which is set for its second month of losses. You're seeing risk reversals across a number of currencies, suggesting that there is a turn in sentiment around the greenback. Enthusiasm for the US dollar in near a 4-month low on this metric, so just worth bearing in mind. Let's flip the screen and have a look at the yellow metal that, of course, is gold, because it's hit a record. It's closing in on 2,500. Part of that is around the political risk story and wanting to hedge into gold. The other part, of course, ties back once again to expectations around those rate cuts. So just keep an eye on the yellow metal. Is this overextended? Have the gains gone too far and too fast? Year to date up 20%, or is there further to go? The opening trade is up next with the market lens, of course, as we build up to the open at 8 a.m. Inflation data out of the UK in just a couple of minutes' time. What that means for the BOE. Stay with us. This is Bloomberg.